Good evening. It's actually almost good morning here Eastern time. It's 11 p.m. and you can see stock futures down about a third of a percent. But let me just go there. Yeah, nice gap down right at the open for the futures market. We'll see if we can recover some of these losses as the night progresses. But if you look, and I was just looking at the stock futures over. And by the way, this is recorded. It's going to be up at the blog at Option Millionaires, and you can also if you have any questions, raise your hand, and I'll try and get to them. I'm going to go over just some of the main events coming up this week. Sounds like a wrestling match, and go over some stocks. There are some earnings this week, as far as I know, and go over some of those. So if you look, this is a 4-hour, but this chart goes all the way back to the start of the year, and I like getting this. I like utilizing this great pen. So look, my nice neat trend line there. You can see each time we've rallied, we've come back to support. And actually, this line here is the Abenomics trend line that goes back to November of 2012. Nonetheless, that would be where we're going to find support if we do indeed continue to fall. However, if you look, each time we've had a nice move, we pull back a little bit, and then we've continued higher. So we'll see. We're really at a very interesting juncture considering what's coming up this week in the market. And I've got to get this pen off so I can get my pointer back on. There we go. If you look, let me just pull up now I have to clear the screen. There we go. Okay. And if you look here, the dollar is slightly weaker, which is something we haven't seen in a while. If you look, the U.S. dollar has been stronger. And you can see if you look, it just looks like it's consolidating here to me for another blast up to new highs. That would imply possibly higher interest rates still, and you see the dollar yen is pulling back a little bit. This is the 30-year bond futures here are up just a little bit, so we have a little bit of strength. That's going to imply a stronger TLT tomorrow if the market would open at this level. We have coming up, I mean, the Federal Reserve meets Tuesday. Could they come out on Wednesday? There's a lot of pressure. A lot of people say, oh, the economy's coming around. There's no, and you were hearing the reverse of it. Many years ago, it's like do more. And now it's like, all right, cut the quantitative easing. And now it's what pushed. And I think that's going to be the key thing: is when are they going to tell the market interest rates are going to start to be jacked up? Right now, over in Europe, they're not talking about raising interest rates. We're going into negative territory. We started out with ZIRP here, zero interest rate policy, and over in Europe, it's NIRP, negative interest rate policy. So I don't know. I always expect the Federal Reserve to do something, and every time they've shocked the market, it's always been bullish for stocks. And if gold hit an 8-month low, and this is the GLD, which tracks gold, hit an 8-month low, and you can see it's coming right near support there at the 116 level, but it's just been melting. And you would think in this environment where we have so many headwinds as far as conflict is concerned and uncertainty, is quantitative easing. Everybody was talking about gold throughout after the financial crisis as a hedge against devaluing currencies, and we're seeing a devaluation of currencies globally. The Japanese are doing it to ECB, and the Federal Reserve, which is taking the foot off the gas pedal, but still a 0% interest rate policy. Nonetheless, gold continues to fall, and if the Federal Reserve comes out and doesn't announce any more stimulus and just continuing up the pattern, I think that they're going to talk about pretty much what they've talked about all along. They're going to be there. They're going to be there until this until this Hail Mary of a pass gets completed. And then on Thursday we have the vote over in the Scotland vote to see if they're going to leave, and that will be interesting. You watch the dollar pound, which, if you look at this, let me just pull up the bigger chart here. Sorry, a little slow tonight. And there you go. You can see what's happening with the pound. Once that referendum gets voted upon, we'll see. And you can see the strength. And if you look back, the currency market used to be wild back with the financial crisis. And you can see what the dollar pound cross was back in 2008, and what a collapse. A 70 pip collapse. That's just not 70 pip, excuse me. That's a 700 pip collapse. Nonetheless, just pulling back from highs. We'll see if we can bounce. So currency market's interesting to watch because you can see what's been leading up the stock market, or helping to lead it, has been the move off the lows from Abenomics. This was November 2012, and the move off the lows has coincided with a continuation of the stock rally. And if you look at the dollar has been gaining strength yet, but stocks continue to go up. So something else to watch as well. We have I don't know if you're in Barron's. Let me just make sure everybody can hear me. Okay. Well, yeah, that would be the issue. In Barron's, they were talking about the debt. There was the headline. It was a small little blurb in Barron's this weekend. It says Greece debt sale positive reception over $2 billion. I mean, to me, that's 2 years ago. Nobody wanted to sell to buy any debt from Greece, from the Greeks, and now it's like a little blurb in the bottom right corner on the middle of Barron's. There's a great piece. Piper Jaffray from September 10th says they expect the S&P 500 to go to 2,350 in 2015. We suspect low interest rates, low inflation, a dovish Fed policy. And let me just pull up the chart for the SPY, which kind of tells us where we are. And I pull these channels out. That's short term. And I'm going to go over this in my morning market video a little more in depth. And I don't know how that got there. But this is the Abenomics low trend line, which is what we've been really bouncing across, giving us plenty of support. And if you look, remember the S&P 500 futures I was just talking about a couple minutes ago. This is the trend line that I was drawing. And you can see each time we bounced off it nicely. Sometimes we didn't bounce off it. We pulled back and continued on. That's the juncture we're at now. Are we just pulling back for a move up to new record highs, or are we going to pull back to the trend line? That's the issue here. The other thing to keep an eye on, too, is this overbought, oversold area, where each of the times we've gotten oversold over the last 2 years, we've seen a significant, it's marked a move off support and significant rally from that level. So we're in the middle point here. So yeah, indeed, we can get a continued sell-off, and I would expect us to go no further than this support line here. And as Piper Jaffray says in their September 10th note, it says, given there are 25% fewer investable stocks today than there were in the early 2000s, we think the market is primed to go higher. When asset allocation shifts towards equities, this should underpin the bull market for the foreseeable future. We reiterate our 2014 price target of 2,100 for the S&P 500 and establish our year-end 2015 goal of 2,350. So they expect a continuation of this bull market. It makes sense. It's stuff that JB's been talking about. He wrote a couple posts at the middle of this year and towards the end of last year about how there's less stock out there to buy. It's basic supply and demand. And if you look at it, a lot of people with a lot of the banks buying stocks, people aren't selling, or you have people accumulating stocks. As we go higher, you start to see the volume drop because there's less supply out there, and the price rises. So that's why every pullback since the lows in 2009 has been a great buying opportunity, and we'll see if that's the case here. It looks like we're going to open under the 199 level for the SPY, and this might be a wait for the dust to settle type moment where we get towards midweek. And again, I don't know. I think a lot of what's going to be talked about, even if it's negative, they talk about maybe raising interest rates sooner than most of the market, especially. I think a lot of it's going to be kind of shrugged off, and we're just going to see a rip. I hate to say it, but that's pretty much what's been going on. And they also a couple pieces about let's see, Pfizer being an undervalued stock. So we look, maybe it's a possible call trade. If you look at a short-term chart here of Pfizer, it looks like it's consolidating here. So if Pfizer opens flat, the market looks to be opening lower tomorrow. So if Pfizer opens flat, maybe we can get a boost on that. That'd be Barron's, and maybe look to get some calls there. Starbucks, they talked about negatively. You can see it broke below support. Hedgeye came out with a negative piece on them, going with the similar thesis about McDonald's. McDonald's same-store sales were abysmal, and Starbucks, the growth story, I guess they're trying to say, is over. They are indeed finding other means to try and increase their revenue, food products, etc. But we'll see. So this week we have the 6th anniversary of the Lehman Brothers collapse, and it's coinciding with the largest IPO in history with Alibaba. Alibaba's, I believe it's going to be Thursday. It's going to be priced between $60 and $66 a share. And you've seen Yahoo kind of get a lift off it to multi-year highs. You'd have to go back to the financial, go back. It is football season. Back to the internet bubble to get to where Yahoo was back then. You can see that was breaking out of a long-term channel just recently. And again, I don't know if I pull up Yahoo in a while, you can see the channel I put up there, and you can see it's really very bullish move for Yahoo. So we can see a continuation of that. I think I saw some calculations, and these calculations have been out for a while, basically valuing the Alibaba stake at something like $38 or $42. Excuse me for 1 second. And that if you then that's $38 doesn't include anything else as far as what Yahoo does, which not as much as Google, but hey, they do run my fantasy sports league, so so we'll see if Yahoo can continue to the upside as long as Mercer Meyer is not asleep at the wheel. Let's go into some stocks that have earnings this week. Tuesday is Adobe. I'm not 100% sure on any of these earnings reports, so please bear with me. But you can see Adobe has broken out. Excuse me, is late in my head. It's kind of spinning a little bit from all of the exciting football action. But you can see it's kind of consolidating here. I would continue to the upside, would be the best trade here for Adobe, which is down 2% on Friday. But look for record highs. I believe that would be record highs. Let's go back. We'll go back to the internet bubble. Yeah, that would be record highs. And that's funny how you can just bring some of these lines all the way across. Oh, we didn't want to do that. Well, anyway. All right, let's get out of Adobe. Woo. Okay, and we have before the bell, FedEx, which some use as a litmus towards what the economy is doing. And look at FedEx. A lot of people talk about this being a bubble. But when you have a shipping stock blowing to record levels the stock has never seen before, it's not like they sell, pettoys.com back in the bubble era. This is a legitimate stock with real people, real companies, real revenues, been around forever. So when you see it start to break the record highs, which it has just recently, and I did a piece about it in a chart maybe 2 months ago, a month ago, but you can see it's ready to break out. We'll see if the earnings report on Wednesday is going to tell us. It was a little bit of an indicator if the market's right about this, pushing it to record highs, or if we get a pullback, maybe it's the weakening and the bears will come out and say, ooh, FedEx dropped 5%. That means the economy's not doing so well. We also have Thursday, we have earnings from, and of course we have the Alibaba IPO. We have Oracle, which is coming out after the bell, I believe. Yeah. And let's just look at the long-term chart. Again, to me, this looks bullish. I don't know. Everything looks bullish to me. Maybe I got to take off my bull glasses and my horns. And then we have NQ, which has been beaten down. Muddy Waters is all over this, calling it another Chinese fraud. So it's either going to zero or it's going to $12. I'm not sure the earnings report's really going to move it much, but I'm sure interest will start to grow. And we have Red Hat, which is at just about all-time highs here. Put in a double top recently. It's a high-priced stock. I think the last earnings report it plummeted, didn't it? Yeah. It's the last time I talked about it here was this head and shoulders pattern. I don't know where I talked. Maybe it was on one of my market videos. But nonetheless, look at that nice head and shoulders pattern. And afterwards, this was the earnings collapse. We can go back and actually in time and look. 1, 2, 3. 1, 2, 3. Yeah, so that's the last 2 earnings reports ago, and then you can go back to another one. 1, 2, 3. So that's the other earnings report. So if you want to look at from that perspective, Red Hat has done very nice. One earnings report, very nice. One earnings report, not so nice. And then another earnings report, pretty nice. Pretty nice if you're on the right side of the trade. The bottom line is could make a big move. Let's look at Red Hat and see what the market's pricing at. About a $4 move. That's about a, 6.5% move or something like that. And if you look at some of the option contracts, the 60s are going for $2.30 $2.30 on the bid, so say $2.40, and the 60 puts are $1.80. Yeah. So that might be an attractive trade. We'll see if there's not a lot of earnings this week, so that might be the one to get into. I'm just going to go over some individual charts. I know it's going to be a quick one. I know JB usually has all these spreadsheets up and all this information and data. I'm just going basically from charts. It is late. And this is recorded, by the way, so you can pull this up later on the blog at optionalmillionaires.com when I get it uploaded. But the basic gist of this entire week is we have the Federal Reserve coming out on Wednesday, and we have are the Scottish leaving the UK. Is that? I mean, that's pretty much it. Let's see. I had a nice little piece here, and this was from Barron's as well. He says the world may be a mess, but the world's central bankers have endless free money. The effects are ticked off by Bank of America's chief investment strategist Michael Harnett. It says 1.4 people around the globe are experiencing negative real inflation, negative real interest rates, inflation adjusted, I should say. 80% of the global equity market capitalization is supported by ZIRP, 0% interest rate monetary policies. And 45% of all government bonds yield less than 1%. So everyone would be looking. This is what I'm trying to get at. I thought it was pretty appropriate and funny. It says there will be all market participants will be looking keenly for some clues as to when the last call will come. And I just pictured, it's 4 o'clock in the morning or 3:58, and there's a couple stragglers around, and kind of equating it to the market. It's like, all right. Last call. Who wants to be the last one to, get on this market before it falls to pieces? So the FOMC, the Federal Open Market Committee's meeting is this week. Include various members' projections. They're going to do the infamous dots, as well as a post-meeting press conference with our favorite chairwoman, Janet Yellen. So exciting! I just can't wait. Tune in on Wednesday, Janet Yellen. All right, so let's pull up some charts. And I wanted to pull up, again, I did gold. Let's go to Google, which very disappointing this week. You see we had a nice uptrend. Still, the cup and handle still in place, but it's certainly breaking through medium-term support here. And we might very well get down to that 550 level now, especially if futures down. It seems every day Google would try and break out, just wouldn't. So you could also look, we have a lot of room to go before it's oversold. Excuse me for 1 second. And so Google, it's just not working out so far. I still believe that at some point it's going to rocket to record levels. And when it does, it's going to be a very lucrative trade, just like it was from the start of May or the earnings breakout recently. So I'm not giving up on Google, but again, I don't want to be greedy. I don't want to be getting in front of further weakness if we've broken through short-term support. Maybe get a better spot here. Let's look at someone's bringing up Baidu and figure we got Baidu, Google. Might as well talk about Baidu here. Yeah, this looks consolidating. Now we might get a break. I think there were some weak China numbers out today. Quote me if I'm wrong, or correct me if I'm wrong. Baidu was at short-term support here over the last couple of weeks. So we look at the 211 level. That's where it's bounced off of. And if we get down to that level, possibly tomorrow, that's going to be a great buy the dip area. But then again, you'll have everyone talking about this gap up that we had at the end of July. So that might be another interesting juncture. And then, of course, if we're doing Baidu, we might as well do Apple. Apple, which broke out to record levels. Since pulled back, but nonetheless, from a long term. I mean, look at this, is 6-month daily. This is pulled back from the 5-year. And that was to me, if you look from the long-term chart as a 5-year weekly, it still looks very bullish. And the recent action here, we're getting a lot of movement. As long as we stay above this $95 or $96 area, it's just consolidate here, and we're going to head up to make, again, new record highs. I brought this up a long time ago. I put it up at the blog at optionmillionaires.com, the long-term chart pattern of Apple, and the fact, and when we were at the bottom here, I was talking about it because, all these prices, there was movement back then, but since we're up so high, they look kind of muted. But nonetheless, we have the first parabolic move up for Apple, consolidation, and the pullback. The pullback was over 50%. This is to the lows in 2009. This is split adjusted. I think in 2009, the low came back to about $78. So you can do the math there. And then we had the move up, and this was 702 up here, which is really, what, 90 something. This was the high in September of 2012. We pulled back over 50%, just like we did back here. And now we're making our next move up. So if you want to take a you are here kind of perspective, we're right here. We're right here of a multi-year move up to probably another 150, 200% from where we are. That's just my pure winging it perspective, but that's what I think is going to happen. That's what's happened in the past, and it's already started to come to fruition. I was talking about this even before it started making its way up to record highs. That's Apple. Short term, it's going to be a tough slog, only because you have record levels. You have the market starting to pull back a little bit here, and you have the bears starting to come out. So we could see a little continued weakness, but again, it's all going to be in the confines of a digestion. I like to call that digestion these days, but consolidation for a move up back to record levels by the end of the year. Let's look at some stocks that I'm in. ESI, which is continuing to disappoint because it's not moving anywhere. It's kind of flatlined, and nonetheless, it flatlined for a couple months. Well, it was more of a slow melt before breaking lower. I'm waiting. One day it will move, and we'll see if we can get that move up. Again, I pointed out it could just be the shorts running out of, hey, you know what, let me cover this and get into something else. Something to spur a short squeeze to get this over 10. There's a massive amount of shorts in the stock. I'm not saying that's what's ultimately going to propel it. Maybe it'll just sit here. Maybe it'll go to zero. But I think it's just from a chart perspective, the fact that it's moved rapidly in the past, and if we get any kind of positive news, this could be an explosive trade, and it's pretty cheap to get into. I still have the $8 and $9 calls. CRR, I have the 105 calls. Hanging in its support here. Staying alive, staying alive. There's a lot, finding out this is a shale, an oil type trade, so we can pull up oil futures. And so if oil futures are getting pummeled, which they are, they're down over 1.1%. My trade on CRR might not work out. These options I got for the 105 strike expire on Friday after the close. I will not be able to trade them anymore. So let's see if we can get that move up. Maybe oil will bounce, and you can see we'll pull up the USO. Wow, look at that! I don't know what is that. Yeah. That's why I like the Thinkorswim platform, because I put some of these charts in and these support resistance lines, and I'll pull something up that I haven't pulled up in a long time, and the line will just fall into place. In this case, it doesn't really make too much sense what I did. I guess I was making some sort of a wedge pattern. Let me pull back. No. Okay, well, the oil's been confined after its ramp up, and it's funny because oil was going to 160 a barrel earlier this year when we had the Middle East conflict, and now that it's fallen, you don't hear anything about it. You can see crude oil has been dropping off a cliff, and you notice it when you go to fill up your gas, right? Let's pull up a 20-year weekly. You can see, kind of looks weak to me. You can almost say it's consolidated. You can draw, support and resistance lines, but it's broken. It looks like it's going to continue low, but you know, time will tell. Time will tell. Oh, we do have one more chart. Pier 1 Imports. I don't even think that's a $10 stock. That's for earnings this week. That's a $15 stock. So we'll see some of these stocks. This one's actually pretty oversold. Let's just put it a little bit. There's earnings for PRR. Pier 1, this is going to be after the bell on Wednesday. It's pulling back. Actually, if you look from a 2-year perspective, it's just about at support here. So that's not really going to give us too much of an indication what's it going to do post-earnings, but it's something to note. Yeah, so we've actually had, and I've talked about FUYE towards the end of last month. FUYE done really well, and I said it was going to head up to about the $40, $45 level, and there we are. We're getting a nice move. There's a 5-year weekly. You see the volume picking up, the buying, and we'll probably start to see the volume take a tick or two down, but the stock continued to rise. Fuel unexpectedly spiking. What a week. Look at that candle. It was down big one day and rocketed. Look at that, almost $19. Let me just pull in a little closer. Get a little closer. And you can see the big move down for fuel because the stock had terrible earnings and outlook. But this is one of those stocks that I think, and I'm just going to pull it to the 9-month, and you can see the gaps it's had. It was $70 stock, had a couple gaps for earnings, but it's starting to recover, and I can certainly see it go back to 25 bucks. So this is a stock that only has monthly options. So if you want to trade it, the options for September expire at the end of this week, and then we have October options that you can get into if you're a little less risk averse. We had Lulu. Lulu had earnings report, nice move up on Lulu. What was the other ones we had? Ulta. Ulta was a great trade. It was, JB had it on the watch list, had a nice move up on Friday. Was that all-time highs? Just off all-time highs. This was a $130 stock. So let's see. We have Priceline continuing to be weak. Somebody asked me about this chart in the chat room. I said support was at 1100, and I could see it going there. And then I went ahead and bought calls. I went right against what I said. And look at it. This is the 5-year weekly. It's been down the last 3 weeks. And we could see that accelerate down to this support line. Once we get to 1100, that might be a great spot. Hopefully, if it does happen, it happens towards the end of the week. The options will be cheap, and we can pounce on the stock for a bounce. Pounce for a bounce. That's the new motto there. Whole Foods has been very disappointing. Rocketed over 39 briefly on Thursday, I believe it was, but it's pulling back again to support. It's just kind of stuck here, but I think one of these days, it's just going to make a nice rapid ascent up, and it's going to hit 50 bucks again. But again, what do I know? Twitter. Let's go with Twitter. Continues as a 5-year weekly. I mean, look at it. It's been up all 5, 6, 7 of the last 8 of the last 9 weeks, something like that. So look at that. I mean, this has been a nice move off its lows. This was the big lockup. The insiders were able to dump their shares, and then we continued to the upside. A big capital raise this week. What was it? Increased to about $1.8 billion. But why not? It's a great time to tap the capital markets. We have low interest rates, and it seems like stocks are impervious to any kind of downside. How about Boeing? Boeing still looks on set to go over 130. I'm not sure it's going to happen this week. We might actually get a move back down to 120 before it happens, but we got pretty close to hitting 130. We're putting in lower highs. That's the only thing that has me a little worried. We'll get down to support once again, and then that might send us up to 130. And finally, TLT. Again, the bond market. I talked about this a couple Fridays ago, and I got into the 119 puts. And look at that beautiful double top. Actually, you can bring it across. It's like a triple top, but it's at least a short-term double top. Let me pull it a little bit. And you can see the significant. Let's pull in 1-year chart. You can see what I'm talking about. Look at that. Perfectly hit that resistance line. Is pulling back. And I don't know. I'm not sure it's going to get down to 110.50, but that's where it's looking to head. Of course, we're getting stocks pulling back here, futures overnight, and the bond market's actually stronger, so we might actually see a bounce on TLT. That might be the start of a move back up. We're starting to get oversold like we were back here in November. It was a brief rally. That was about a 4-5% rally, so we'll see if we can get that out of TLT. I might actually be a call buyer. So some of the trades I'm looking to get into, possibly Red Hat earnings this week. FedEx, I like FedEx for upside in spite of it hitting record levels. Go with the trend. It's tough these days with the market at record levels to wrap your mind around buying a stock at all-time highs. But they don't get there from people selling. They get there because it's buyers. And again, you look at this, we hit record highs here, and volume's just dwindling because the supply of FedEx stocks is shrinking as people are holding on to it. And if you get new buyers into the stock, I mean, look at the volume even back in 2009 and 2010, 2012. I know the volume is a little bit more when the price of a stock or an ETF is lower, but I think some of it's got to do with the fact that people are just holding on to stock. Supply and demand. Let's see, I got a couple more. This year's streak of 33. Let's see, what was that? 33 all-time highs this year. In today's dollars, as the table shows, the S&P 500 still has 100 points more to go before exceeding its all-time high in March of 2000. So basically, the devaluation of the U.S. dollar has, you might think we're at record levels as far as the stock market is concerned, but we're not, because the dollar is worth less, meaning these gains are worth less and we have to head higher. They're saying the high we would have to hit for the S&P 500, 2,124, in order to get to new record levels. Anyway, I just figured I'd bring that up. All right, UPB here. Yeah, we got a Trump going his casino is going bankrupt again. What is that, for the 5th time? It's like he runs a show on how to be rich, and I guess running bankrupt companies is the way to go. Yeah, so if we look from the short term for the market, we could continue seeing the weakness that we've had. But I think overall support will be right here, at least at this 196 level, if not higher. We've broken down. We might get as low as 197, 196.50 tomorrow at the worst. And I would think if we do get a nice spike down, we're going to find support here. It's going to be a great spot to buy the dip again, as it was August 8th and August 9th. We did briefly break below the Abenomics trend line, but then recovered smartly. It was a spectacular rally if you were on that trade for the bounce. All right, if anyone has any charts that they'd want to look at, other than that, yeah, I know JB usually has spreadsheets and he's got all sorts of data and charts and information, but it is late and he kind of threw this on me last minute. So hopefully some of these charts give you a good perspective of what I think, where I think the market's headed. I'm going to do a market video in about 4 or 5 hours, and I'll put that up in the blog at Option Millionaires as well. And if you get out of here, thank you so much for tuning in. Okay, so I have some questions. Let's see. VXX, absolutely. There was a big trade in VXX. I'll just pull that trade up for you real quick. If you look at VXX, it was the January, and you go out to 2015. Let me just close this out. January 2015. Look at that, the open interest there. It was the $20 puts. Oh gosh, the price was it was a lot higher than that. Let me just pull up the chart. I hate doing this. I have to fix my indicators in here. It's not very clear. I think it was around 65 or 75 cents, something like that. But basically, if you look at the VXX from a long-term perspective, it's almost like an asset that's got it just keeps bleeding. We don't want to do 60 days. Yeah, I mean, that's the chart I like to look at when I see VXX, because anyone who bought VXX for any duration has lost a significant amount of that investment. But from a short-term perspective, it looks like we're starting to work our way off the low. Unfortunately, the VXX doesn't make those big moves anymore. I shouldn't say that. Back in August, it did that right precisely at our lows. We had a really nice move. Yeah, I would think there's going to be some increased volatility this week, so that in itself might get VXX back over 30. But I think the issue is futures are already lower. So if you want to get into a short-term trade, let's see what stock futures are right now. Yeah, they remain just off their session lows, almost 0.4 lower. The Dow Jones Industrial Average futures are something like 75 points lower or something like that. Let me see if I could open up the chat window. I'm sorry if I missed it. There was other questions, and I don't know how to open this stupid chat window. Let me see if we could do it. Questions. Oh, my goodness. Let's see. GTAT. I've seen that splattered around. It's a hot stock, isn't it, these days? Down over 6. Look at this nice support there. If there was a time to get back in the stock, it would be right here. Let me just pull up the 5-10 days. Yeah, nice support at the 12.75. Let's see what the options price is for GTAT. Now, again, you don't have to strictly buy the option. You just go long. If there's a 10% bounce in the stock, you make a nice little pretty penny. Right now it's at 12.82. You can get the 12.50s for hopefully 65 cents. That's a good trade there. So yeah, GTAT to me looks like it's at support. If you were going to buy it for a bounce, this is it right here. And you even have a little bit of a confirmation because we're starting to get that move, and we'll see if the GTAT can get back up and close that gap, but that might take a little time. Let's see if I can open up another question or two, and then we'll call it a night. It is getting late. I just started it later than usual because I figured football was going on, and maybe we'll get some puts, and that's it. All right. Oh. Okay, I'm sorry if I couldn't get to all your questions. I'm going to do a live webinar. I'm going to put it up, I believe, next Monday, but I'll see what I can schedule. And that's it. It's going to be up at the blog at optionmillionaires.com. The recording has been saved, and I'm going to have it. It's just going to get processed. So I'll upload it. It'll be up, and you can listen to it. I'll have my morning market video up, hopefully by about 2 hours before the market's going to open, and I'll go over some more charts. And I hope everyone has a good night's sleep, and I hope someone enjoyed the week ahead without JB. Basically, it's options expire this week. It's going to be a volatile week. We have the FOMC, and we have the Scottish vote on Thursday and the Alibaba IPO. I mean, that's those are the three highlights of this week. It's also the 6th anniversary of the Lehman Brothers collapse. So something to keep in mind. We're starting to pull back here overnight, and we'll see if that's a trend that's going to be, if that's going to continue through the week until we get the Fed minutes, not the Fed minutes, the Federal Reserve coming out, and Janet Yellen, to see if she can augment stock prices. We'll see. The last time she talked down some of the social media stocks, so we'll see if she does that again. Yeah, I'll upload that as well. I don't think I've gotten around to uploading that. I'll take care of that. All right, everybody, have a good evening, and I'll see you in the chat room tomorrow. Goodbye.